Welcome back, everyone. We've hoped you've had a proper break, survived the festive season, and managed to switch off even just for a little. As 2026 kicks off, South Africa is being asked to start the year with optimism, even if daily life hasn't exactly caught up yet. You see, in his New Year's message, President Cyril Ramaphosa struck a hopeful tone, saying that the country is turning a corner after a rather tough year and is urging South Africans to remain united and confident about what lies ahead. Now, Ramaphosa didn't exactly gloss over the problems. He acknowledged that unemployment remains high, the cost of living is squeezing households, crime continues to weigh on communities, and service delivery often falls short. But his argument was that beneath those pressures, the foundations for improvements are finally starting to hold. To make that case, the president pointed to a series of headline wins. For instance, inflation has eased, the rand has strengthened, South Africa's credit rating has been upgraded for the first time in 2 decades, Eskom has avoided load shedding for months, and government has budgeted for more than 1 trillion rand for infrastructure upgrades over the next 3 years. Now, in saying that though, the disconnect is where those wins are felt. You see, stronger macro numbers don't automatically fix potholes, make public transport safer, or stretch paychecks further at month end. And so that's why this message matters. It's not just a reflection of the year gone by, it's a benchmark being set for the year ahead. And so by issuing this statement, Ramaphosa is effectively asking South Africans to measure 2026 less by speeches and more by whether these improvements finally show up where it counts, which is in our daily lives. So that overarching question, whether progress is real or just looks good on paper, shows up quickly when you turn to the markets. If South Africa had a standout performer in 2025, it wasn't a business or a sports star, it was the rand. You see, the currency has been on a tear since last year and carried that momentum into 2026, trading at its strongest levels in over 3 years. You see, after gaining over 12% against the dollar in 2025, it pushed below 16 Rand 60 in early Jan. And so for context, this time a year ago, it was trading closer to 18 Rand 70. Now, in reality, much of that move is coming from the other side of the equation. You see, the dollar has weakened sharply, losing around 8 to 9% against major currencies, its worst performance in years. Investors have been spooked by US tariff plans and growing bets that interest rates will be cut more aggressively than expected. And so you see, lower US rates means lower return on dollar assets, making the currency less attractive. That said, South Africa hasn't been irrelevant here. Analysts point to improved sentiment driven by the country's grey list removal and credit rating upgrade, plus the absence of load shedding. And so the takeaway here is that the rand's strength is being driven first by global forces, especially a weaker dollar, with improving South African fundamentals helping at the margins rather than leading the charge. Now, there's also some news that has nothing to do with markets, but a lot to do with you and I as consumers. If you've ever gone shopping for a second-hand car, there's a good chance that you've come across We Buy Cars. It's one of the biggest names in the used car market, which is exactly why this case has caught the attention of regulators. Now, the problem wasn't just faulty cars, it was what happened after the sale. You see, regulators say that some customers report defective vehicles were blocked from getting proper refunds or repairs because of clauses buried in We Buy Cars contracts. You see, those clauses effectively try to shift risk onto the buyers, something that the Consumer Protection Act doesn't allow. And so after a 3-year investigation, We Buy Cars agreed to pay a 2.5 million rand fine, refund 3.4 million rand to 31 affected customers, and rewrite its terms to comply with the law. And so the bigger point here isn't the money, it's the message. Regulators are making it clear that companies can't rely on this fine print to sidestep consumer law, especially in the used car market, one of the most complained about sectors in the country. And so for buyers, it's reassurance that the law actually works. And for the industry, it's a warning that consumer protection law isn't optional. And before we cruise on to our first Bagel Bite of the year, here's a couple other headlines worth knowing. For starters, MultiChoice has avoided losing a dozen popular DStv channels after its parent company, Canal Plus, struck a last-minute multi-year deal with Warner Bros. Discovery, preserving channels like CNN, Discovery, TLC, and Cartoon Network into 2026. Agricultural Minister John Steenhuisen says that a key farming support program exceeded its targets last year, but nearly half of the supported farmers still failed to access markets, highlighting a gap between government assistance and real commercial viability. And automotive giant Motors has retrenched 86 workers and warned hundreds more of pay and benefit changes as cheaper Chinese car brands intensify pressure on local dealers and squeeze margins across the motor industry. And on to our first Bagel Bite of the year, my friends. Let's start off with a win. Also, before we get into that, just a side note, if you are enjoying the show, please be sure to like and subscribe if you haven't done so already. And if you're enjoying this, forward this to a friend who might enjoy it just as much. Thanks a bunch. Now that out the way, here is the question. What is the currency of Vietnam? Is it A, ding, B, dong, or C, ditch? We'll give you the answer at the end of the show. Every summer, the same thing happens. Your friends in Cape Town are posting sunset drinks with clear skies and calm evenings, while everyone in KZN and Gauteng is navigating thunderstorms. Now, that difference isn't random. It's how South Africa's climate actually works. You see, much of South Africa sits in a summer rainfall zone, where rain is driven by heat rather than cold fronts. So inland areas like Joburg heat up during the day, and as the ground warms, air near the surface becomes unstable and starts to rise. And so by mid to late afternoon, that rising air cools, condenses, and forms thunderstorms, often intense, short, and very predictable. Now KZN follows the same rhythm, just with more fuel. You see, warm, humid air comes off the Indian Ocean during the day, and by late afternoon, when the heat peaks, that moisture gets pushed upward, and you get those near daily summer storms that almost feel scheduled. And as we've seen, Cape Town plays a very different game. Its Mediterranean climate means dry summers and winter rain, which is why the evenings look a lot more appealing. And so there it is, same country, very different evenings. And as for that Bagel Bite, the answer is dong, Vietnam's currency. It's one of the few currencies in the world that no longer uses coins at all, after inflation pushed everyday transactions entirely into banknotes. And my friends, that's it for today's show, the first one of the year. Thanks so much for tuning in. I'm so grateful to have you guys on board so early. And as you probably would have noticed already, the backdrop is slightly different, the production is slightly different, and honestly that just scratches the surface of what we have in store for Daily Bagel this year, and I'm just so excited. As for you though, I'm excited to see what 2026 has in store for you. Wishing you all a blessed and fruitful year ahead. And so yeah, on that note, remember, be kind to one another, and we'll catch you all tomorrow for the next round of the good stuff. God bless.